Good morning. Wall Street traders drove the S&P 500 index down from near record levels on Tuesday as chip makers erased a rally amid a rotation into more economically sensitive industries. Gold and silver rebounded after an historic sell-off, while oil jumped amid a flare-up in geopolitical risks following reports the US Navy shot down an Iranian drone headed towards an aircraft carrier in the Arabian Sea. Bitcoin hit the lowest since November 2024, trading near $76,000 US. The Dow Jones index fell by 167 points or 0.3%. The S&P 500 index dipped 59 points or 0.8%, and the tech-heavy Nasdaq index shed 337 points or 1.4%. 6 of the 11 S&P 500 sectors were down on Tuesday as investors continued to rotate capital out of technology companies and into cyclical and value stocks. Energy stocks led gains up 3.3% as oil prices rose. Defensive consumer staples closed up 1.7% and material stocks lifted 2%, but tech shares slid 2.2%. Optimism that the American economy is set to take off has fueled a rotation with companies whose fortunes are closely tied to the business cycle attracting investor cash. Wall Street also tumbled on Tuesday as investors worried about AI creating more competition for software makers, keeping investors on edge ahead of quarterly reports from Alphabet and Amazon later this week. Nvidia dropped 2.8% and Microsoft fell 2.9%. Alphabet, which reports on Wednesday, lost 1.2%, while Amazon declined 1.8% ahead of its report on Thursday. Investors in recent months have become pickier about AI-related stocks, looking for companies generating measurable returns from their outsized investments in the new technology. Wall Street's attention on Tuesday turned to technology companies that could face steeper competition and lower margins. One catalyst driving those concerns was Anthropic's launch of a legal tool for its Claude AI chatbot. Salesforce, Adobe, Synopsys, Datadog and Atlassian each fell around 7%, while Intuit slumped 11%. AI data firm Palantir Technologies bucked the trend, rising 6.9% following strong quarterly results late on Monday. Worries that Google AI travel planning pose a risk to booking platforms sent shares of Expedia down 15.3% in its worst day since May 2024. Healthcare stocks came under pressure after Wegovy maker Novo Nordisk warned that it expected steep decline in its annual sales. The company's US-listed shares plummeted 14.9%. Rival Eli Lilly fell 3.9%, while other obesity drug makers Viking Therapeutics and Structure Therapeutics fell 1.7% and 6.8% respectively. Pfizer shares fell 3.3% despite posting fourth quarter profit above estimates, while Merck rose 2.5% after quarterly results. PayPal forecast 2026 profit below estimates, sending its shares plunging 20.3%. The IT research firm Gartner plunged 20.9% to the bottom of the S&P 500 index after its full-year guidance missed Wall Street expectations. Walmart became the first retailer ever to hit $1 trillion in market valuation, with its shares rising 2.9% following an eye-watering stock climb driven by its digital business growth and acquisition of new customers. PepsiCo shares gained 4.9%, with the brand announcing a price cut on core brands such as Lay's and Doritos. US Treasury yields barely budged on Tuesday, with investors passing the latest remarks from central bank speakers. Federal Reserve Bank of Richmond President Tom Barkin said policy easing has bolstered the jobs market as officials now look to bring inflation back to target. Fed Governor Stephen Mirren said the absence of strong price pressures means rates need to be lowered again this year. Legislation to end a US government shutdown narrowly cleared a procedural hurdle in the House of Representatives, setting up a vote on the final passage later in the day. The partial shutdown has postponed releases of key jobs data on Friday, along with the JOLTS job vacancy report originally expected on Tuesday. The US 10-year Treasury yield fell by 1 point to 4.27%, and the US 2-year Treasury yield was steady near 3.57%. On global commodity markets, oil prices rose over 1% on Tuesday after the US shot down an Iranian drone approaching a US aircraft carrier and armed boats approached a US-flagged vessel in the Strait of Hormuz, stoking concerns that talks aimed at de-escalating US-Iran tensions could be disrupted. The Brent crude price gained 1.6% to $67.33 a barrel, and the US NYMEX crude price increased 1.7% to $63.21 a barrel. Gulf futures settled 6.1% higher at $4,935 an ounce for its biggest daily rise since November 2008 as bargain hunters stepped in amid resilient underlying fundamentals. Silver surged 4.8% to $83.23 an ounce. Copper futures jumped 4.5% after news that China plans to boost stockpiles of the metal. Iron ore futures, however, dipped 0.5% to $102.16 a tonne as sluggish steel demand ahead of the Chinese Lunar New Year later this month weighed on it. Australian shares are poised to start the trading day lower on Wednesday, tracking weakness on Wall Street where tech stocks were hit. According to the latest SPI futures, the ASX 200 index is expected to open the day down by 20 points or 0.2%. The Reserve Bank of Australia raised interest rates by 25 basis points to 3.85% in a unanimous decision yesterday, delivering the first hike in 2 years and coming just 6 months after its last cut in August. The RBA now joins the Bank of Japan as the only other developed world central bank tightening policy at the moment. Australia's central bank was forced to reverse course and raise interest rates on Tuesday as it struggles to bring inflation under control in a supply-constrained economy. The RBA noted that inflation picked up materially in the second half of 2025, that growth and private demand has strengthened substantially more than expected, driven by both household spending and investment, and that financial conditions eased over 2025 and it is uncertain whether they remain restrictive. Investors ramped up bets for a follow-up hike in May, which is now priced around 75%. Markets expect an additional total tightening of 40 basis points this year. On the balance of probabilities, Commonwealth Bank economists now expect the RBA to follow up with a rate hike in May, taking the cash rate to 4.1%. In company news on Wednesday, Amcor, Centuria Office REIT and Pinnacle Investment Management all issue earnings. Nufarm hosts an annual general meeting. Investors will now be looking out for the latest ADP employment survey due on Wednesday to gain an insight into the state of the US labour market. The ADP report is expected to show private sector employment rose by 45,000 jobs in January. The Bureau of Labour Statistics jobs report for January, which was originally scheduled to be released on Friday, is delayed because of the partial government shutdown. The Wall Street earnings calendar continues on Wednesday with reports from Alphabet, weight loss drug maker Eli Lilly and AI-focused Qualcomm all scheduled. Investors will focus on results and capital spending plans from AI-focused hyperscaler Google parent Alphabet. The Aussie dollar surged yesterday after the Reserve Bank of Australia delivered its first rate increase in 2 years yesterday, but has since eased from 70.49 US cents to 69.82 US cents and was near 70.2 US cents at the US close. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a great day.